Ghana's central bank on Monday surprised the market by cutting its main policy rates 13.5% from 14.5, 100 basis points reduction. Central Bank Governor Ernest Addison said during a news conference that consumer price inflation was expected to remain within the bank's target band of 8% plus or minus 2 percentage points over the next quarter after falling to 8.5% in April due to lower food price inflation. Gbolahan Taiwo, Economist, Sub-Saharan Africa, Stanbic IBTC, joins us to discuss further. Gbolahan, thank you so much for joining us on the show. Great to have you. So, were you surprised at this decision? Because it seemed like a lot of folks expected them to hold rates where they are. So, what's your take on what happened?
Well, yeah, surprised at the timing of the decision, but not surprised that the Bank of Ghana lowered rates. Our expectation has always been that, that was bound to happen this year. In fact, we had penciled in a rate cut sometimes in second half of this year or early next year, and largely because of inflation expectations. So if you recall, last year, inflation surged largely because of the pandemic fallout that caused global disruptions. And saw food inflation rise to about 15.1% last year, and which of course meant headline inflation rose high as well. But now those base effects are now beginning to kick in. And food inflation has now eased considerably to about 6.5% year on year. So that, along with the inflation expectations that the Bank of Ghana has, is what is prompting them to, of course, lower rates at this time. So we think that the decision in itself was going to happen, but we thought that Bank of Ghana would have allowed the inflation to be more sustainably within that target band for a period of time before they decided to take this measure, because there are still risks to the inflation outlook. Now, when you look at the inflation basket in Ghana, for instance, the utilities sub-segment has been rising quite significantly. In March, it was about 29% year on year.
Wow.
In April, it dropped to about 25% year on year. And that's largely because of higher international prices, which led to, of course, higher petrol prices in Ghana. If you compare to Nigeria, of course, where subsidies are still in place, there are no subsidies in place in Ghana. So they've seen that impact. But we think that, if all prices remain where they are, that combined with the base effects, we should see that inflation remain within that 6 to 10 target band that the Bank of Ghana is looking for. And of course, they have some room to ease policy now, which of course would mean that growth will grow more. The growth outlook will be more sustainable over the medium term.
Fantastic. So if I take what you just said, thank you so much for that. Will this move pay off? Will we see the desired effects of this rate cuts based on what the bank is, their outlook, their economic outlook is?
I think a couple of things to consider here, and I have to link it to the fixed income market. Now, the Bank of Ghana, I think they are now becoming favorites with surprises. Back in 2019, they had that, early 2019 in January to be precise, they had this surprise rate cut as well. And what that did, that triggered some sellers from foreign portfolio investors. And then we saw the currency under pressure during that time. Now, the question here is that going to happen again? I don't think so, because I think that the dynamics are quite different. Why? Because there is easier liquidity conditions globally because of global easing that have happened since COVID. And now you have ample global liquidity that are chasing high-yielding assets in the economy in different countries. Now, when you compare Ghana, a frontier economy across the continent, still offers one of the highest real returns on the continent. So I think foreign portfolio investors will still like the story. They still like that carry trade, and that would continue to be impactful. But I think what the Bank of Ghana is trying to target here is for growth to be more sustainable, given the fallout from the pandemic. Now, money supply, M2, which we know is rising about 25% in April, but what has not risen considerably is private sector credit. And that is linked to two things. One, of course, the macroeconomic environment hasn't been very conducive because of COVID. The second is there hasn't been actually increased credit demand. So there is actually aggregate demand, a pressure on aggregate demand and purchasing power. High inflation, slightly depreciated currency, all of that will contribute to that. So the Bank of Ghana is trying to stimulate the economy, and I think that would happen. The other bit to consider again is high cost of borrowing for the government. Now the government, they did an Eurobond roadshow recently, and they were able to get $3 billion from the Eurobond market.
Yes, I remember that.
Yeah, one of the things that they are considering is lowering domestic costs. Because when you look at their annual interest expense, 80% of that is from domestic interest costs, which basically means that they have been higher interest rates over the time, and they are looking to reduce that sustainability. So that plays well into their hands as well, and they will be able to get interest rates down to be able to spur growth and, of course, reduce the cost of borrowing for the government.
Fantastic. Thank you. Very illustrative there. So this leads me to my next question. A great explanation there. Are central banks across the world, using Ghana as an example, Nigeria, are they limited with the tools that they have to boost aggregate demand?
I mean, aggregate demand is one thing. Now, what a central bank can do is try to spur supply of money. So you try to ease policy to improve money, to improve liquidity in the system, and then get supply to the right people. Now, aggregate demand in itself needs to come from a place where standard of living is improving. There is, macroeconomic environment that is improving and sustainably improving at that. So that's a concern. Now, since COVID, what we have seen is that monetary policies, global central banks, even across the world, have had to employ more monetary policy tactics to be able to increase liquidity in the system. Now, except for global economies like, of course, the US and the Eurozone, you've seen them be able to impact money more meaningfully from a fiscal stimulus perspective. Across the African continent, that fiscal space is not there to enact that level of stimulus. So, I mean, for instance, you don't see Ghana, Nigeria, Angola, Senegal handing $1,000 checks to everybody to be able to stimulate. So you need that sort of activity to properly stimulate aggregate demand. That is absent, and you need it from a fiscal point of view. So monetary policy in that sense is sort of limited because they can use monetary policy to lowering rates, reducing cash reserve requirements, doing anything to improve the liquidity on the system. But people need to come and take the credit. People need to come and invest or take the money to be able to invest in whatever sectors they want to invest in. And that is largely a job for the fiscal, right? The fiscal needs to be able to create policies to encourage investment in those sectors, while monetary policy would, create that liquidity-driven environment that would support that. So we think that there needs to be a balance and a cohesion between what the monetary policy authorities are doing and what fiscal policy authorities are doing to be able to get that right balance to stimulate aggregate demand.
Fantastic. Thank you so much for that. The IMF, International Monetary Fund, they're predicting or projecting 4.6% GDP growth for Ghana this year. What do you make of that projection? And what's yours, I guess, over at Stanbic as well?
Well, I mean, I think they're quite conservative. So to put perspective into it, initially we had forecast about 4.8% for Ghana this year. That was based on the preliminary numbers that they put out. But when Q4 numbers came through, they revised downward Q2 and Q3 numbers to show a more significant contraction. I mean, that means that you're going to see quite a lot of base effects playing through in the overall GDP growth numbers you're going to see for Ghana this year. So currently, we are projecting Ghana to grow closer to 7% this year.
Oh, wow.
Yes, closer to 7%. And that is largely underpinned by base effects. So because there was a significant contraction, over 5% in Q2 and over 3% in Q3, just the mere fact that we don't expect stringent public health restrictions to come back to force in Ghana, and even in most African economies in general this year, then you would see that base effect. But is it going to be broad-based economic recovery? Are you going to see, to your point, aggregate demand stimulated?
Right.
No, we're not going to get there. But in the face of it, and as you see for most global economies, you will see very big numbers. You probably see Ghana growing in Q2 by about 10% or 13%.
Wow.
But that's going to be largely on the fact of base effects. Now, the services sector would continue to recover. The international borders are now open there. Economic activity is beginning to resume. But we think that more sustainably over the second half of the year, with global economic recovery will come improvement in import demand, and that would sustainably improve economic activity in Ghana. And that's why we think that, the economy could well grow at about 7.3% this year.
That is all right. So you've backed it up there. Very, very optimistic projection there. Still on projections. Yesterday we covered this. The OECD revised its global growth forecast to 5.8%. I mean, you're Sub-Saharan Africa. I know that's your focus. But just throwing it out there, what's your take on that revision, I guess, globally?
Yeah, I mean, I think it was bound to happen, right? There has always been that case that, the economic recovery could be protracted in a lot of ways. And that's because, the virus is still evolving, right? We have Indian variant, we know what's happening in most parts of Asia, with the second or even third wave that they are facing right now. So on the basis of that, you will see a lot of revisions to economic forecasts. Now, largely the expectation was that, by the second half of this year, a good portion of the global economy would have been vaccinated. We want that global vaccination drive to be more meaningful. But it's not happening quite that way. I mean, the UK has done well, the US has done well. But when you look at India, that is very big, particularly for the oil market, for instance, and where you're starting to think, oil demand and oil consumption expected to pick up more materially during the second half of this year. There could be some concerns there. So when you look at those other big Asian economies, that looks like, they are still struggling with getting the virus under control. Of course, you probably see quite a number of revisions to the global economic growth forecast that people had underpinned with, the global vaccination drive. It is well underway. It is working in some parts, but I think that growth will be protracted and recovery will be protracted in most cases.
Thank you for that. But back to Ghana, I wanted to ask you about the slate of new taxes. I think fuel tax was one of them that were introduced, or rather increased, I think, last month. Do you think there's going to be a drag on the growth prospects of Ghana?
Well, not necessarily on growth, but more on inflation, right?
Oh, okay.
So again, back to the inflation forecast, right? So you see those taxes happen. I mean, you see, I think the VAT flat rate is going up. And by the way, these are just, revenue measures by the government to be able to, get fiscal deficit under check. And it's concerning. I mean, at the MPC yesterday, the Bank of Ghana was saying that, they were still slightly behind their revenue projections for Q1. So that again is still a concern. There is that need for domestic revenue mobilization, and doing it just after COVID, or trying to recover from COVID, it's a very difficult task. And that's why you see that those taxes happen, and that's why the Ghanaian government are looking to put those taxes through. But I think that you would see some slowdown somewhat, but I think more meaningfully you see the impact more on inflation than overall economic output growth in itself.
Great stuff. I'm glad you mentioned inflation, because I think you've already mentioned it. It's slowed to, I think, a 13-month low, 8.5% April. Is that encouraging? I mean, putting within the context of these taxes now we just mentioned, what's the trajectory like, I guess, for inflation outlook for Ghana?
I mean, it is encouraging. It is now within the Bank of Ghana's target band, which is between 6 to 10%. So 8.5 is somewhere just closer to the middle there. And like I said earlier, I think what is going to come to play here a lot is base effect. So big jump last year with the inflation, not so much this year. I mean, like I said earlier, food went to 15%. Now food is at 6.5% year on year. And we think that will continue to be the case. Food is about 43% of the inflation basket in Ghana. Utilities, if oil prices stay where they are, maybe they start to unwind as well. So I think base effects would have a lot to play there. But the risks are of course, to the upside, where you have further increase in petrol prices, for instance. That would tend to permeate and have a ripple effect on output prices generally. And these new taxes that we talked about. I mean, you put that in place again, and then output prices increase, and then inflation increases. But I think that trying to get that balance between, the base effect unwinding and then the new risk to inflation, I think you probably will still be somewhere below the 10% over the remainder of the year. So I think it's still going to be well in check.
Great stuff. So, in fact, my next question was about headwinds. So you've already covered it. So the taxes, those pretty much are you don't see any other headwinds outside of what you've already mentioned as far as inflation is concerned for Ghana?
Well, I mean, I guess one other thing is the currency, right? The pass-through that you tend to have from a currency depreciation. For instance, we forecast that, the Ghanaian cedi will be closer to 6 by the end of this year, 6.1. And that's largely because with economic recovery, import demand decreases, you see more demand for the greenback in that sense. Now, what has happened in Ghana this year is that we've seen significant foreign positioning, right? Meaning foreign portfolio investors have rushed to Ghana. Easily, why? I mean, you can argue that, Nigeria has been uninvestable, to be honest,
right?
Given all of the currency issues and whatnot. So you've not seen foreign portfolio investors troop into Nigeria like they would normally do. So Ghana, given the significant high returns that they have, the real returns, I mean, you're talking real returns closer to 800, 900 basis points right now.
Wow.
What's not to love about Ghana?
Yeah. So
the positioning has increased quite significantly. Now, while that is good for, the appreciation of the currency and the stability of the currency, it provides some headwinds down the line. Why? Because you invest in a bond, you get coupons every quarter or every other quarter. So we think that will start to come through. When those coupons start coming, the outflows that could come from that could put some more pressure on the currency.
Well, what's your take on as far as insurance is concerned, and within Africa, with what we've seen with heirs there?
I mean, I think it's critical. I think what heirs is doing is laudable. But as an economist, I always have to think of the risks to these things, right? And as you mentioned earlier on, the insurance penetration in Nigeria, in fact in Africa, still way in single digits, right? And of course, we need to get that up. But I'm going to come from a different angle here and say, what's standard of living in Nigeria like? What's standard of living in Africa like, right? If World Bank is saying that, you're probably going to be 80, 100 million people in poverty at this rate in 2024, in 2025, then who's going to take up the insurance? Because if you haven't found people to, provide basic amenities, food, clothing, shelter, they definitely will not think about insurance. Second bit is, how are we helping businesses grow in the country? Is this a conducive business environment enough for businesses to thrive enough so that they want to be able to be assured that they can, take on some of those products and be assured that, they are secure. Insurance is a very good thing, and when you go to global economies, it is something that is a natural part of their lives, right? But you cannot compare the standard of living and the operating business environment in those places to what we currently have. So whilst this is a laudable idea and we encourage it and it should continue to go on, the other side of this is, what are the fiscal authorities doing to improve business conditions, to improve standard of living in the country so that you can get more of this insurance penetration?
Fantastic. Has the pandemic brought all of this to the forefront, to where healthcare, insurance are the big topics of the day?
No, absolutely. I mean, I think the pandemic has brought a lot of things to the forefront. And I think that fiscal authorities have now recognized that, things like healthcare, insurance and all of these things are very critical for livelihoods and for the populace in general. And they should start thinking more critically about how to, improve the social welfare of citizens. And I think that it is critical.
Gbolahan Taiwo, Sub-Saharan African economist with Stanbic IBTC, thank you so much for taking time to talk to us not only about Ghana's surprise rate cut, but also the insurance sector and what to do with Africa's growth. Thank you so much.